Good day, everyone. Welcome to our webinar for March 2019. I'd like to start off by looking at the US economy. So I'm just going to go to the S&P 500, assuming I can get that. There it is. The US economy has been doing, I think, very well. In the fourth quarter of last year, the US economy grew at 2.6%. Which was above expectations of about 2.4%, and but much lower than the third quarter and the second quarter. The third quarter had 3.4% growth, and the second quarter had 4.2% growth. So the growth rate has slowed down a little. Nonetheless, last year as a whole, the average for 2018 was 3.1%, which may not sound like a great deal, but in such a huge economy, it is a very big deal. In fact, it's enough of growth to basically pull the world out of the recession that it was in. And of course, added to that growth, and part of that growth is Trump's tax cuts, which we've spoken about, and it's also being caused in the longer term by the massive stimulation from the Monetary Policy Committee there, the Fed's MPC, who have been stimulating the American economy for some time. If we look at the chart, which you should have in front of you, you can see there's the record high. I'm just going to point to it with the mouse, which occurred on the 20th of September last year, and it was at 2930. And then it fell into this correction here, as you can see. This is what we call a flag formation, this formation here. And then after that, Donald Trump shut the American government down over Christmas during December, and he did it at a time when most investors were on their end-of-year holidays, resulting in a sharp fall-off in the market, which we always thought would be a V-bottom, because as soon as those investors came back from their holidays, they bought the S&P back up again, and here you can see it's rising. So this is a very classical V-bottom. And then, as you can see, the market trended up very strongly, and now, from that date there, which is the 25th of February, during the day, intraday, it bumped that resistance level there at 28.13 or 28.10. And then it's bumped it again the day before yesterday, and there may be 2 or 3 bumps here. Of course, there are 2 things that can happen now. Either this is a double or triple top, and the market's going to fall back from this level, which we think is unlikely, or it's going to keep bumping this resistance level until it breaks through. And we think that's the most likely scenario, and we think it will happen probably in the next 2 to 3 weeks. Once you get a resistance level like this broken on the upside, there's usually a very strong upward move, because investors once again believe in the bull market, and I think that once it's broken above this resistance, it will go on to break above that record high there of 29.30, and it'll probably do that quite quickly. When that happens, of course, the bull market resumes. This long correction, 8-month correction, will be over, and the bull market, which has been in place since March 2009, will continue. So it will then be a 10-year-old bull market. All right, let's consider the South African economy now. Of course, the big feature of the economy over this last month or so has been the problems at Eskom. That's probably the single biggest issue in our economy at the moment. It impacts the economy both through the threat to government debt, and also, of course, through load shedding, which we've experienced a little bit of. It's a financial disaster, and it causes businesses to slow their production as they cope with load shedding. The problem appears to be at Medupi and Kusuli, the 2 big power stations, coal-fired power stations, which Eskom has been building. The work there has been done by a firm called Hitachi, a Japanese firm. That company gave the ANC $5 million a while back, probably to get the contract to do Medupi and Kusuli. And it has been fined by the American SEC for that bribe. So, of course, one of the results of this new load shedding is that many consumers and companies have decided to take themselves off the grid. And despite the fact that that is quite expensive, it obviously gives them security of supply and gives them more control over their situation. And this is obviously particularly important for companies. But as that happens, of course, there's less and less demand for Eskom's power, and Eskom in the past has responded to that by putting prices up. So it's a sort of vicious circle, if you like. Moody's has latched onto this idea and says that the future electricity supply in South Africa is probably going to be difficult until 2025. We don't think it will take so long, but certainly it is a problem, and it is one that this government has to deal with. One of the problems here, of course, is the empowerment policies at Eskom, where skilled engineers have been replaced by inexperienced and unskilled people. This is all part of the empowerment program. The other thing is that the Eskom board has allowed the number of employees at Eskom to escalate, to get much, much bigger, and it's estimated that they have twice as many employees as they actually need. So the company needs to downsize. But Cyril Ramaphosa has said again and again that he's not going to talk about retrenchments at Eskom. He says there's not going to be any retrenchments there. We believe that this is because he is thinking about the election on the 8th of May, and he doesn't want to talk about downsizing and retrenchments, anything that in fact could annoy the union movement before that election. So obviously this means you've got to think about what's going to happen after the election. Of course, also it was announced by Ramaphosa that we're going to split Eskom into 3 separate entities, which essentially comes down to breaking it into generation and distribution. So the generation of power on the one hand and distribution on the other hand. It's interesting to know that there are already 2 coal-fired power stations which are going to be privately owned, which are in development. One is called Thabametsi, and the other one is called Khanyisa. They are being financed by external financiers, so that is the way that we need to go. We need to get more of these outside power suppliers, generators, that are privately controlled and owned, and possibly just have a contract with Eskom. Another problem that arises here has been what's going to happen to things like the Hillside Aluminium Smelter. This aluminium smelter belongs to South 32. Graham Kerr, the CEO of that company, has said that if Eskom does not reduce or at least hold its prices for electricity, then that aluminium smelter will be put out of business, and with it all the companies that rely on sourcing their aluminium from South 32. So that would be really a disaster for the economy, and they are negotiating with Eskom to sort that problem out. Of course, the budget itself was dominated by Eskom, and it was agreed to put 23 billion rand a year into Eskom for as long as a decade. All in all, they calculated that it will be about 150 billion that is put in there to help them with their debt situation. Obviously, this really sweeps the problem under the carpet, doesn't it? There's been a significant under-collection by SARS once again. SARS is about 15 billion rand below the collection target that was set last year in October. But some of that will be recovered in terms of this budget because of fiscal drag. Fiscal drag will in fact result in an extra 12.6 billion coming in. Fiscal drag is where the government does not adjust the tax tables to reflect the effects of inflation. But the big problem has been that SARS has been decimated, and it is slowly recovering, but it's going to take a while before it gets back to where it was under Pravin Gordhan. So the budget really was a holding budget. It was designed to keep everything going until the 8th of May. And then after that, we'll see what this government can do about the real deep structural problems in the economy. It looks like from the various polls, the ANC will be returned with about 59%. But so long as they get returned with a reasonable majority, I think we can expect the reform process to continue. One small piece of good news is that during the last year, the size of the civil service has declined. They've actually managed to get rid of 16,000 employees. So that's a significant positive. It shows that the Ramaphosa administration is intent on reducing the civil service, which is one of the things it really needs to do in order to get this government back on track, get the debt levels down. And the debt, of course, is the key thing here. In terms of the budget, Tito Mboweni says that our debt will rise to 60% of GDP by the year 2022. And that is quite high. That is quite high. But it's not out of the ballpark. For example, the United States of America currently has a budget deficit, which is 105% of their annual GDP. So they're in a far worse position than South Africa. The market reaction to the budget, initially, while the speech was being given, things like the R186 and the Rand were negative, they fell, but then they came back to normal, and now I think that what we can see from that is that overseas investors regard this as a reasonably good budget, certainly a holding budget. And then finally, the other news on the economy, of course, is the inflation rate. The CPI came down to just 4%. So it's well below the midpoint in the target range between 3 and 6. And it opens the door for the possibility of a rate cut possibly next year. But certainly it means that there shouldn't be any rate increases this year. Okay, I've got a few points, general points, which I think we need to talk about. One is this gas and gas concentrate find near Mossel Bay, where there's been a lot in the press about it. It is a real game changer. It could bring in as much as as R1 trillion to South Africa over the next 20 years. So that is a very interesting development. Obviously, that money is not going to come through immediately. There will be no pumping probably for quite a few years, but nonetheless, it is a very positive development. The second thing that I wanted to draw your attention to is that the CIPC has sent a letter to the Public Investment Corporation and insisted that it recovers the 4.3 billion rand given to AO when they listed. The PIC is the Public Investment Corporation. They control the pension funds of civil servants, and they decided to buy 29% of AO, which is of course a company controlled by the Survey family, particularly by Iqbal Survey, through AEEI, which is another listed company in that same group. And they put in 4.3 billion rand to buy this 29%, a figure which is way, way higher than the value of the company at the time. So now the Companies and Intellectual Property Corporation, the CIPC, is insisting that the PIC recovers that 4.3 billion rand. So this is a very interesting thing. The CIPC has never before really exercised its powers to insist on the proper implementation of the Companies Act. And then the third thing I wanted to talk about under general is that there's been an announcement by Rain, who's an internet service provider, that they will be bringing 5G to South Africa by the middle of this year, and that they intend to have 1,000 5G sites within 2 years. So of course 5G is the next step up from 4G, which we're all quite familiar with by now. It's much faster. In fact, there's a suggestion that you can transfer as much as 1 gigabyte per second over a 5G connection. So it's much better than ADSL. It's better than anything we've got in this country. I think that it will impact the entertainment industry, and so it is a consideration for multi-choice, because obviously on the internet available on the internet. There are all sorts of services which can supply you with any movie in the world, or series or documentary in the world, for free. You just have to belong to the service, and then you just download it, you stream it onto your television or onto your computer. So why do you need to pay MultiChoice 1,000 Rand a month for a DSTV subscription? Rather put that money into an internet connection with an unlimited or 100 gigabyte service. And a lot of people are doing that, and I think that is going to be a major factor for MultiChoice going forward. Okay, in the commodities area, I'd like to just talk briefly about what we've spoken about before, which is the showdown which is taking place between Sibanye, Neil Froneman, who's the CEO there, and Joseph Matunjwa, who's the president of AMCU, the union movement. Two things have really happened in that battle, which I think is a very important battle. First of all, Froneman has decided to close another 5 shafts, I think it is, and he will be retrenching 6,670 people. He says, or Sibanye says, this has got nothing to do with the strike action, but of course it will impact on AMCU because it means that an awful lot more of their employees are now going to be out of a job. Matunjwa has tried, in his desperation, he's been trying to get other mines to strike in sympathy, mines which have nothing to do with Sibanye. I don't think he'll be successful in that. And once again, I reiterate my view that Matunjwa is going to have to back down sooner or later. And that will cause him to lose face and damage his position in the union movement. Also, staying with commodities, I just want to talk about the gold index. I don't know if you've been aware of this, but the gold index has actually gone up very sharply in the last 6 months. In the last 6 months, it's actually gone up 86%. So here's the gold index in front of you. It's up 86% in 6 months. And that's a time when the rand has actually strengthened by 5.3%. So this has nothing to do with the rand, but what it is to do with is the gold price. So the dollar price of gold has risen quite sharply over the same period, which you should be able to see. There it is. You can see how the dollar price of gold has gone up very strongly. The rand has strengthened, which would tend to make this less of an impact. But the gold index, and remember, in our gold index we have a lot of marginal gold mines that are close to the gold price. So any rise in the dollar price of gold and the rand price of gold will have a disproportionately big impact on their share prices. Why is gold going up like this? We believe it's because the world economy is recovering, and as people make more money all over the world, some of that money is finding its way into gold bullion. So that's what we think the reason for that is. We've talked about the new listings a little bit. MultiChoice, I just want to put that up on the screen. If you're not sure where to find it on your program, just go to MC Group, MC-Group, and you'll find it there. It's only, of course, been listed for 5 days now, but here you can see how it opened on the first day, and it was very positive, very strong opening. Market went up very, very far, and then settled back a little bit. And then after that initial day, the euphoria has sort of worn off, and there's been stagging, people who are selling out of the share because they really don't want them. Perhaps they just got the shares because they hold NASPAS, and they're just trying to get rid of them at a decent price. And you can see the price coming down here. We always advise people when there's a new listing to just wait and see what the market does with that new listing before taking any action. And you can see that there is still, in MultiChoice, quite a lot of stagging going on. I think MultiChoice will be quite a good investment. Right now, they've got 7 million subscribers inside South Africa and another 6.7 million in the rest of Africa. But the CEO of MultiChoice says that there are 27 million potential clients for the company in the rest of Africa. And of course, as I've said just now, they will be impacted by free services like Kodi, and the advent of 5G will have an impact as well. Another new listing that's coming up is a company called Bushveld. They should be listing roughly in the middle of 2019, around June. And they are a vanadium mine, and they've got very good prospects, and it may be worth you taking a look at them. They can produce vanadium for about $20 a ton, and the current price is about $80 a ton. So this company produces vanadium, which is a metal used in the steel industry for certain very fancy kinds of steel, and there's a consistent demand for it. And then there's a company called Revego, R-E-V-E-G-O, which is basically being sponsored by Investec, who are putting in R1 billion. Then they're going to list it on the stock exchange as an IPO and try to raise another R1 billion, so they'll have 2 billion. And then the company's objective is to get involved in renewable energy, wind farms and photovoltaic farms and so on. And they reckon that by doing that, they can generate a steady return of 9% per annum. So it will be a utility share, and that is always quite interesting. Looking a little further afield at the cement industry, this industry is taking huge strain. It's very, very oversupplied in South Africa. The total production capacity in South Africa is now about 19 million tons, and the combined cement companies of South Africa are selling about 14 million tons. And of course, there's about 1 to 2 million tons of imports coming into South Africa, which are actually undercutting the local industry. And these imports are coming from Pakistan, China, Vietnam. And the Concrete Institute, there's an institute called the Concrete Institute, are looking to get ITAC to impose tariffs on imported cement to try and cut down on the imports. But cement is a very high bulk and high weight substance, and therefore very difficult and expensive to transport from one place to another. So the question must arise, should we really be preventing these cheap imports? Obviously they are nice for the consumer, they keep prices low, and they keep inflation down. So in our view, we have to ask the question, if we can't produce cement as cheaply here in South Africa as, for example, China can produce it and ship it here, then maybe we shouldn't be in the cement industry. This is a question which, of course, involves other industries as well, like the chicken business, which is also being dented by cheap imports. We have to know what business we should be in, and I don't think we should be protecting industries unnecessarily, because that costs the consumer. If a bag of cement costs him an extra 10 rand, then that has an impact on everything throughout the economy. All right, let's look at some companies. I've pulled out some companies which I think are deserving of your attention. Obviously, there's far more information on these companies in the software and in the notes, which you'll get at the end of this presentation. The first one I want to look at is OneLogix. Now, let's just go and have a look at that. OneLogix is obviously a logistics company. It listed on the JSE in 2004, and it's got 3 divisions. Now, you'll straight away notice when you look at this chart that the company is fairly thinly traded. I'm going to put a 5-year chart. You can see that because there are many days where these dashes exist where the share didn't trade at all. Put 5-year chart on and it looks a little bit better, but still you can see it's quite a patchy sort of blocky type share chart. Now, they have 3 divisions there at OneLogix. They do cross-border deliveries of new vehicles. That's about half their business, 47%. Then they do auto logistics for commercial vehicles, and that's about 46%. Then they've got a Durban Harbour freight logistics operation, which generates about 7% of their turnover. In the 6 months to the 30th of November last year, they reported a 26% increase in turnover, with headline earnings per share up 28%, and a net asset value which was up 22%. They have bought a further 40 hectares of land to add to their Umlaas Road logistics hub, and they paid 280 million rand for that. They've also been doing a share buyback, so they bought back 3.5 million of their own shares for 12.4 million. Now, if you look at this share, you'll see that the volume traded is on a daily basis is about 100,000 rand. So they have about 100,000 rands worth of shares changing hands every day. And that means that as a private investor, you could get involved. Just remember that there are quite a few days where there's no volume traded at all. And while you're thinking about that, it is true that South Africa intends to double its vehicle exports by 2022. And that will obviously have a big impact on a company like OneLogic. So we think this is quite an interesting company for you to take a look at. The next one I want to look at is Robex. Now, Robex is a construction company. It was listed on the JSE in 2007. Recently, it's been taking a lot of strain, as have all the construction companies. But Robex is one of those companies in the construction industry that will survive. It's not getting much work from Sanral these days, and so it's moved into solar and wind energy. It is being involved in building the Drugfontein photovoltaic farm and also the Capita wind farm. Both of those are in the Northern Cape. Headline earnings per share were down 72.8% in the most recent period, off a 4% drop in turnover, due to the tough conditions in the market. But Robex has got branches in Cameroon, Zambia, Namibia, Botswana, and also in Australia. And it should benefit from any improvement in the economy. And it's certainly not at a high price now. The price earnings ratio is at 14.5. We think it's worth looking at. The next company that we want to draw your attention to is City Lodge. You all know City Lodge, of course. But what's important about City Lodge is it's the quintessential South African company. It reflects the South African economic situation very accurately, and the political situation. In the 6 months to the 31st of December, occupancies at City Lodge hotels fell from 63% to 58%. Obviously, this is companies cutting back on executive travel. But City Lodge, the company, remains in very good health financially, and they are expanding. They are building a 168-room hotel at Waterfall City, just on the east side of Johannesburg, and they clearly think that things will get better. We believe that this is a very solid share that will improve as the economy improves. Then I just need to look at Capitec quickly. As you know, Capitec Bank has been one of our favorite shares for a long time. Here is Capitec. I'm going to put a bit more data on the screen. There you can see what happened to Capitec, and you can see over here the Viceroy report came out, and it caused the share to fall from about 1,100 Rand a share right down to 700 at one stage. A little later on, we published an article over here where this arrow is on the 19th of February. And we had done a price earnings growth ratio calculation on Capitec, the price earnings growth ratio, also called the PEG ratio. And that showed that it was a very good time to buy into Capitec shares, that the shares were undervalued at 820 Rand. Since then, the share has gone up very strongly. As you can see, it's now 1,250, around 1,250. And we think it will go up further. It's up by 50% since we wrote that article. Since then, they've also bought Mercantile Bank, which is clearly more of a business bank, and they paid 3.5 billion Rand for that. Of course, they are facing Patrice Motsepe's Time Bank, which is being marketed through Pick n Pay stores. And the big thing about Time Bank is that it has no transaction fees. And considering that Capitec at its last results 40% of its turnover came from transaction fees. This is clearly something of a threat, but Capitec has brought its fees down in response, and we believe that Capitec will continue to do very well as it matures. Okay, the next company I want to look at is Bidcorp. Now, Bidcorp was spun out of Bidvest a while back. They produced an excellent set of results for the 6 months to the 31st of December, with headline earnings per share up 9.2%. And this is a big international company involved in the supply of food all over the world. One of the things that was interesting in reading through their financial statements was that they said they've had a big problem in first world countries where they operate because of the lack of skills. They can't find people to employ. And this is because first world economies are rapidly approaching full employment. As the American economy expands, its unemployment rate has dropped below 4%. It is approaching full employment, what the economists call full employment. And at that point, employees are difficult to find. And that means that wages start to build up. In other words, as companies have to compete with each other to get decent quality employees, they are forced to push wages and salaries higher, which of course is inflationary. But at this stage, inflation in Europe and America is still very low. But we see that wage inflation and salary inflation will start to push the inflation rate up fairly soon, because a number of economies are approaching full employment. But it was interesting to read that in Bidcorp's financial results. Bidcorp, of course, a great company. We believe it will benefit from the growth in the world economy and the South African economy, and it's a strong share which you should definitely look at. Let's look at Pan-African now again. I know that I've spoken about this share before. Pan-African is a gold producer. They retreat, they concentrate on retreating reserves. So put 2 years on there. You can see the share fell quite heavily a while back, but they have changed their strategy and they're now getting out of deep level underground mining into reprocessing mine dumps. And that's what they basically do. They are a gold retreatment company. They're closing down their last underground operation, which is Evander, and they're busy mining out all the pillars that they left there. Of course, the pillars are left in order to support the roof in underground mines. And when the mine is finished, it's generally the technique is to mine out those pillars and obviously get out quickly before the roof falls in. They've got the Elikulu plant, which is producing 700,000 ounces per annum. The beautiful thing about Elikulu is that it's producing at a price of about 326,000 Rand per kilo, and the current gold price is around 550,000 Rand per kilo. So this is a low-cost operation, and you can see from the chart on your screen that there's a steady upward trend in the share's price, and we think that this is a good gold share if you're interested in gold shares. Remember earlier I said gold shares have gone up 86%. This is one of the shares that is doing that. All right, I'd now like to look at Itu. If you go into your program and you type ITU, you'll get this share. It is a company which owns property in the United Kingdom and in Spain. It's got 17 of the best shopping malls around London, and it's got 3 in Spain. At the moment, they've got 97% occupancy of their stores, and they managed to generate an increase in rental income in their current period by 1.3%. Generally, they say that half of the UK population will visit one of their stores every year. So that's quite something to be able to claim. Obviously, they've been impacted by Brexit, and as you can see here, the share price has fallen substantially. It's sitting now at about 21 Rand a share, but the net asset value of this company is 52 Rand. And remember, this is 52 Rand's worth of high-quality properties, mostly around London. So it's very strong net assets, I think. And I think that Brexit will fade away in time, and then you'll be able to, if you can buy 52 Rand's worth of assets for 21 Rand, maybe it's worth looking at. We think it looks cheap, and we think it's got a good future. Finally, I'd like to look at AECI. AECI, of course, is a leading producer of chemicals and explosives in South Africa. They service many industries: mining, agriculture, water treatment, food, beverages, and so forth. They've got businesses in Australia, North America, Europe, Asia, and Africa to the north of us. In the year to the 31st of December, turnover was up 26%, and headline earnings per share was up 9%. This is a company that will benefit from any recovery in the South African economy. And they're sitting now on a PE ratio there of 9.7 and with a dividend yield of just under 4.1%. We think this thing looks very cheap indeed, and we recommend it for your consideration. Ladies and gentlemen, thank you very much for listening to me, and we'll see you again in a month's time on the first Wednesday of April. Thank you.